Welcome to The Explainer. In early April 2026, the world got hit with three massive shocks, all at once, and they seem totally unrelated. Today, we're going to unpack each one and then connect the dots, because what they reveal together is a pretty startling picture.
All right, so let's get right into it. You've got an energy crisis threatening to tip us into a global recession. At the same time, there's a sudden panic in the AI investment market, the one that was supposed to be unstoppable. And to top it all off, one of the biggest crypto heists of the year, all happening within days of each other. Coincidence? Or is there a deeper connection? That's what we're here to figure out.
So, our first storm system is brewing in the Persian Gulf, at what is arguably the world's most critical energy choke point, the Strait of Hormuz.
Now, to really get the scale here, you have to understand this isn't just any shipping lane. People call it the planet's energy jugular, and for good reason. Every single day, 20 million barrels of oil and a fifth of the entire world's liquefied natural gas has to pass through this one narrow strip of water. The global economy literally runs on what flows through here.
And in late February 2026, that jugular got squeezed hard. After a conflict flared up involving the US, Israel, and Iran responded by basically shutting the strait down. We're talking missiles, drones, mines, the whole shebang. By early March, traffic just ground to a halt. Now, you do see a glimmer of hope here, with China getting ships through, and then a French vessel, but let's be real, these are clearly exceptions, not the rule.
And this number? Well, it says it all, doesn't it? A 95% drop in commercial traffic. Just let that sink in. The daily flow of about 80 ships was reduced to a mere trickle. Right now, there are around 500 tankers just sitting there, waiting in the Persian Gulf. It's a massive floating traffic jam, and every single one of those ships represents an enormous economic problem. So, what does this do to the price of oil? Well, here are the possibilities. The best case, a quick resolution. Yeah, most people think that's unlikely. The worst case? That's terrifying. Oil could soar past $200 a barrel. Most analysts are putting their money on the base case. A partial reopening, sure, but with disruptions continuing, keeping prices way up there in that $120 to $150 range for a long time.
And the key thing to remember here is this goes way beyond what you pay at the gas pump. A plant in Qatar that produces a third of the world's helium was damaged. Why does that matter? Well, you can't make semiconductors without it. Then there's fertilizer. Prices shot up 50%, which means higher food prices are coming. It's no surprise Bank of America is already warning that U.S. inflation could jump right back to 4% because of all these shockwaves.
Okay, let's pivot to our second storm. This one is tearing right through the frantic, high-stakes world of AI investment.
So, you've got OpenAI on one side, fresh off raising a mind-boggling amount of money at an $852 billion valuation, and on the other, its rival, Anthropic. But if you look closer under the surface, something really strange is happening in the secondary markets. That's where insiders sell their shares. There are literally zero buyers for $600 million of OpenAI shares. Meanwhile, there's over $3.6 billion in unmet demand for Anthropic. And the kicker? Anthropic's revenue has now actually surpassed OpenAI's.
This quote from Ken Smythe at Next Round Capital just says it all. Hundreds of big money institutional investors, and not a single one wants to touch OpenAI stock on the secondary market. That is a massive red flag. It signals a huge dramatic shift in confidence.
So what's causing this reversal? It really comes down to the enterprise market. See, while OpenAI has this huge consumer base, the big institutional investors, they're looking at who can sign those big paying corporate clients. And right now, as you can see from this chart, Anthropic has quietly pulled into the lead with a $30 billion annual revenue run rate, just edging out OpenAI's $25 billion.
And this could not come at a worse time for OpenAI. They were reportedly getting ready for a massive IPO, but with this kind of weak demand from big investors and all the concerns about their sky-high operating costs, that whole plan is now in serious jeopardy. Anthropic, all of a sudden, looks like the safer, smarter bet.
And now for our third storm. We're jumping from Silicon Valley to the Wild West of digital finance, where a massive heist just rocked the world of DeFi.
First, a super quick definition. DeFi, or decentralized finance, is basically an attempt to rebuild the entire financial system, lending, trading, you name it, on blockchains using these automated programs called smart contracts. The whole idea is to get rid of the middlemen, like banks. But as you can imagine, this new system has its own unique vulnerabilities. And on April 1st, those vulnerabilities were just brutally exposed.
More than $200 million were drained from something called Drift Protocol, a major trading platform on the Solana blockchain. In an instant, it became one of the biggest hacks of the year.
So, how'd they do it? Well, investigators are still piecing it all together, but the attack probably exploited one of these weak points. Could have been a simple bug in the code, maybe someone's private keys got stolen, or it could have been a much more sophisticated attack, manipulating the price data the system relies on. The point is, each possibility just highlights how many things can go wrong.
And what's really vital to understand is that this isn't just about drift, it's a recurring nightmare for the DeFi world. The very complexity that makes these platforms so powerful also makes them incredibly fragile. Audits can't catch everything, and unlike a bank, there is no insurance. When the money's gone, it's just gone.
Okay, so we've got a blocked shipping lane, a crisis of confidence in AI, and a massive crypto hack. 3 totally separate storms. Now, let's see how they all connect to reveal that one powerful common thread.
The thread connecting all 3 of these crises? It's vulnerability. The Hormuz crisis? A perfect example of supply chain vulnerability. The AI shakeup? That shows us investment vulnerability, how fast sentiment can just turn on a dime. And the DeFi hack? That's system vulnerability, plain and simple, in our newest financial creations. You see, each story is really just a different chapter in the same book. Our global systems are way more fragile than they appear. So what happens next? Well, this slide lays out the potential futures. There's about a 20% chance of a best-case scenario, where everything just resolves itself quickly. But the most likely outcome, at 50%, is the base case. We're probably looking at a long period of high energy costs, a permanent shift in who leads the AI race, and a much more cautious DeFi market. And the worst case, a full-blown global recession, still has a chilling 30% probability. And that leaves us with one final, and I think crucial question. If a strait in the Middle East, an investment hiccup in Silicon Valley, and a piece of code on a blockchain can all expose such deep fragility at the exact same time, what else are we missing? In a world this interconnected, where's the next shock going to come from? That's the question to think about. Thanks for tuning in to this explainer.